Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about the top 4 stocks I am buying right now. All these stocks that we're going to be talking about today carry so much potential, but more importantly, risk. Right? Anytime we go individual companies, these are going to be high risk, high reward plays, but overall, stocks that carry potential. So, like, follow, and if you want to learn more about trading and investing, check out our school. I'll see you guys in there. It's down below. But enough with that. Let's dive into stock number 1. Stock number 1 is the stock that I've been buying, honestly, over this past year. Given my average price is near and around about $48, this is ticker symbol OKLO. This is a clean-based powered nuclear energy company. But the reason I love them is OKLO is developing advanced small nuclear reactors to help provide reliable carbon-free energy. Honestly, we've seen strong momentum and tailwinds. We've seen huge government support and demand for clean energy for AI and data center growth. A lot of people think that, AI is the future, and I'm a firm believer that AI is one of the best sectors to invest in, of course, but what a lot of people don't realize is how do you power it? We need power. And this is where nuclear energy, it's clean, reliable, and a company like OKLO that's having a whole bunch of great growth and great reactors. Yes, I'm going to be picking up some shares of this. Obviously, the downside, what we've seen out of this is the revenue and financials. Right now, there's no revenue yet, so the company is still like a project company, but we expect the first revenue to come out in about 2027. So yeah, there's still a couple of years, before we could see some great growth. But honestly, we've seen some solid cash influx. We've seen, some large cash reserves, a decent market cap at about $21 billion, and a whole bunch of big upside potential, right? Early mover status equals big opportunity. And that's kind of what I'm thinking with OKLO. Obviously, the risk involved is there's zero current revenue, high burn rate construction, timeline risk. I'm a firm believer in this company, but I'm buying it because it's an early stage nuclear company with huge upside bet on nuclear power. So yeah, I'm going to be picking up some shares. I already do. All right, enough with that. Let's move on to stock number 2. This is a company I'm sure you've heard of, and this is Tesla. Tesla is the leader of EVs. It's growing at an astonishing rate, but more importantly, what I like is they're growing their energy storage and AI with this company. We've seen some decent revenues near and around about $92 billion in 2024, which was really, really nice. Also, what we're seeing here is the energy part of this company growing very, very, very fast at about 67% year over year in 2024. That's at about $10 billion. So it does show some diversification beyond vehicles, which I really, really like. And the margins actually are surprisingly good for automotive. Automotive historically has very bad margins, but Tesla is doing relatively good. Obviously, we've seen a lot of things with this company that are good and bad, but one of the things that I think is important is to understand the CEO. The CEO is heavily influenced by this stock, meaning if he says something good, often the stock skyrockets up. If it says something bad, it tanks down. But more importantly, I think looking back in the next 5 to 10 years, we're going to be wishing we would have bought shares of Tesla. And I know that Tesla is risky, but I'm definitely picking up some shares of this. All right, stock number 3 is a company that I've been buying for probably about 2 years now, and this is SoFi Technologies. This is a fintech company. They compete with every single financial institution. They have, loan refinances. They have a debit, credit card. They offer a whole bunch of financial tools, but I like how they have multiple revenue streams for lending, deposits, investing, brokerage, etc. Also, the revenue. We've seen great revenue growth, 44% year over year. Fee-based revenue is up about 72%. And I also think here what's important is the new administration is making it more mandatory for students to start paying back their student loans, which SoFi makes a bunch of money off of student loans, and more importantly, student loan refinance. For the people that can't pay their student loans, they refinance it and they make some money off it. So it's important. Another thing that I think is cool is this company is definitely focused on younger users, which is nice to see because a lot of banks honestly focus on, honestly, in my opinion, a little bit of an older audience. So it's nice to see that. The risk involved with this, obviously, it comes to a lot more econ. So a lot more depending on how the economy goes. So like interest rates and stuff like that can play a big factor with this company. All right, the last and final company that I'm buying is a quantum computing company, ticker symbol RGTI. This is Rigid T. I don't know, something like that. Could be saying it wrong. Don't really care. Let me know in the comments how you say it. But this is a quantum computing company. So honestly, this company's focusing on infrastructure, on cloud quantum services for big long-term tech. Now, for revenue, the revenue is up about 20%, up to about $1.8 million. But honestly, we've seen a little bit of a downturn. It's down about 41%. So companies like this are often that high risk, high reward play, but it's still fun to have some shares of it. Some key things to pay attention to for me is the new multi-chip for the quantum computer systems, some partnerships, some cloud development, but honestly, the potential is huge for this company. A lot of people love AI when in reality, quantum computing could be just as beneficial for the general economy. And what we're seeing here is these companies are comparing their computers to like the computer I'm using, and they're like 100,000 times faster and smarter. So huge potential for this. Now, obviously, the risk right now is small revenue, of course, because they're still growing. They do kind of lose money, which isn't good for like long term, but it's very common for startups. Timeline could be a little bit of a concern, like how long is this going to take before it pays off? But I definitely think that this company is more of a high risk, high reward bet, and I'm definitely paying attention to it. But the fundamentals are weak, and I think it's exciting. So, guys, I hope you guys all enjoyed it. If you did, smash that like button, subscribe. And if you want to learn more about investing, I'll see you guys in there. Like, follow, and we'll see you guys in the next one, guys. Take care.